Welcome back, Dividend Nation. Without a doubt, one of the best performing REITs of recent years is VICI Properties. This is a real estate investment trust that owns some of the finest gaming resorts in the world. They've made some headlines recently as they've now been expanding into Canada and increasing their ownership of resorts on the Las Vegas Strip. In my opinion, this is one of the top REITs to own in 2023 and for the next several years. Today, I'm going to look at some of the latest news around the company and quickly show you why it's one of my favorite REITs as a dividend growth investor, and I'll share my dividend discount model analysis to give you my estimated fair value. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru, just a regular dude who wants to share my love of dividend growth investing and building financial independence with passive income. If you could do us a favor and please smash that like button and subscribe to keep up with future videos. This helps us out more than you can imagine in bringing you quality dividend investing content. And a quick thanks to all my new subscribers for getting us over the 9,000 subs mark. We are just getting started, and if you haven't subscribed yet, help me get to that 10K mark so we can spread the power of compound interest and passive income. So VICI Properties, I will say, is one of the higher risk, higher reward plays in my own portfolio. So be sure you are doing your due diligence and understand what it is you're investing in, as always. At the moment, I own some in my Roth IRA, and if you're following our Roth IRA investing series, this is one of the REITs I will continue to buy in 2023. I want to build up a good position. I believe strongly in the properties, in their portfolio, and their industry is actually in my own circle of competence. Essentially, VICI is a landlord to casino operators, and so their biggest tenants are concentrated amongst a few companies. 90% of their rents come from 3 companies, and that's probably the largest risk around VICI. Their tenants live and die by tourism, and this was hit extremely hard during the pandemic of 2020 when casinos were forced to shut their doors for months. Things on the Las Vegas Strip and elsewhere have been recovering, but a looming recession could create further difficulty and casino operators could find themselves having trouble covering their rents. And that to me is the risk in investing in a company like this. But long term, I think these are excellent world-class properties, and in good economic times, VICI's tenants are basically printing money. They were spun off from Caesars Entertainment in October of 2017 when they unloaded much of their real estate assets in bankruptcy. And VICI became publicly traded just on February 1st, 2018. Today, they own about half of the properties on the Vegas Strip, and they are increasing that footprint as I make this video. Because on January 11th, 2023, VICI announced that they have finalized the deal to acquire Blackstone REIT's share in 2 more iconic Vegas resorts, the Mandalay Bay and the MGM Grand Las Vegas. And this makes VICI the sole owner of these 2 fine properties on the south side of the Vegas Strip. This transaction is setting VICI back about $1.27 billion. And a few days ago, on January 9th, 2023, VICI announced an acquisition of 4 casinos in Canada, so now they are gone international. The 4 casinos are located in the province of Alberta, and they were purchased from the Pure Canadian Gaming Corporation for about $200.8 million in US dollars. Now, these are the Pure casinos in Edmonton, Yellowhead, Calgary, and Lethbridge. And in this deal, VICI's leased the properties back to Pure under a master lease that has an initial total annual rent of $16 million in US dollars. And this is under a 25-year initial lease. Now, Alberta is the 3rd largest casino gaming market in Canada, and I love the acquisition for VICI Properties and the diversification it adds to their already impressive portfolio. And yet another recent acquisition was made just weeks ago. On December 22nd, 2023, VICI Properties announced their purchase of the Fitz Casino and Hotel and Waterview Casino Hotel, which expands their tenant roster, something we like to see to help minimize their risk. And their new tenant is Foundation Gaming. They are their 10th tenant. This also brings VICI into a new regional gaming market in the Vicksburg, Mississippi region, and that is a solid gaming market for that area. So this company's portfolio is really on an amazing growth trajectory. They're just getting bigger and bigger and acquiring up a lot of really great properties. But with these acquisitions comes the need to raise capital. So on January 12th, 2023, the date I made this video, VICI announced a public offering of 24 million shares, and this has caused shares to dip 2.1%. But consider it a gift, okay? Look, REITs raise funds by issuing shares. This is just something you accept when you invest in real estate investment trusts. And they're acquiring more properties and they have to raise capital to do so. So that's the news, VICI growing larger. Let's take a look at how VICI has performed here from Seeking Alpha. Over the past year, VICI is up 18%, while the S&P 500 is down minus 15%. Even more fascinating is that the VNQ Real Estate ETF, a market cap weighted ETF from Vanguard that is essentially a way to invest in that sector as a whole, is down even further. So the performance of such an ETF reflects the overall performance of the REIT sector over the last year. And this sector is down even more so than the broader market. Coming into 2023, it is one of the more intriguing sectors for dividend investors, in my humble opinion. Let's zoom out a little bit. Here is the 5-year performance of VICI versus the S&P 500. Your shares of VICI are up 67%, while the S&P 500 is up 43%. So we are outperforming just on price alone. This isn't including dividends paid. And in its short time as a REIT, VICI has been an amazing dividend growth stock so far. So we're going to take a closer look at VICI's dividend. But first, I have been asked for a couple ways to support the work we're doing on this channel, and so I've created a couple ways for you to do so. First, I made an account on buymeacoffee.com where you can buy me a coffee as a way to support the channel. You can find the link in the description. Now, personally, I'd rather you use that money to buy dividend stocks for yourself. But if you'd like to support my work in this way, it is much appreciated. And second, much of the data I got from researching is on the website Seeking Alpha, and I have partnered with them to bring you a chance to sign up for 50% off your first year. And that comes out to about $12 a month. And I think that's really a nice value for all the information you get on Seeking Alpha Premium, as well as access to all of the excellent articles that are available. So you can use the link in the description to get 50% off, and this is a great way to help support our channel here. Now, speaking of Seeking Alpha, these grades on VICI properties from Seeking Alpha look like the report card you want to see from your kids, right? There's a lot of hype around the stock. The analysts love it. Seeking Alpha loves it. Wall Street loves it. And back to the VICI, though. It pays a non-qualified dividend of 39 cents per share in the months of January, April, July, and October for a total annual payout of $1.56 per share. Make sure you understand the tax implications of non-qualified dividends. I prefer to hold these in tax-advantaged accounts for the most part. And as I mentioned, I own VICI in my Roth IRA. Now, the yield on VICI shares at the time of publishing is 4.59%. This is about 9% below its historical average of 5.06%. So if you wanted to get VICI at a starting yield of 5%, you want to look to get in below $31.20. And it was right around there a couple of days ago. So opportunities come in this one frequently. Or they have at least in the last year. And the dividend makes up 76% of forward adjusted funds from operations, or AFFO. And AFFO is sort of like free cash flow for REITs. And that's where they pay their dividends from. And VICI has only been paying this dividend for 4 years, but so far they've been growing their dividend payment every year. So we do not yet have a 5-year average annual growth rate, but their latest increase was a generous 8%. And trying to figure out a fair value for VICI, I decided to try a simple dividend discount model valuation. This is also called the Gordon growth model. So making an assumption of 6% dividend growth going forward, being a little more conservative than their last increase, and using a 9% discount rate, this gave me an estimated fair value of $55.12. So this looks great for a dividend investor, and you get a starting yield over 4.5% with high single-digit dividend growth and a company that is growing its revenue very aggressively and its portfolio. And the average analyst price target is $37.57, and this represents 10% upside from its current prices. So this looks good from both the dividend perspective and a price performance perspective. So I just see Vici as a REIT for those looking to maximize total growth. In my opinion, betting on Vici is betting on the resilience of the American economy. Las Vegas is a town that does exceptionally well during strong economic times. And Vici Properties for me is a long-term buy and hold, going to sit on these shares for the next decade and hopefully beyond that. And that's it, folks. Just wanted to cover the latest news, do a quick dive into one of our favorite REITs. I know many of you own this one. I'll be putting out a video in the next few weeks that list out my top REITs to own in 2023, and spoiler alert, Vici Properties is definitely going to be on that list. Now guys, if you aren't following me on Twitter, you can do so at Div Growth Income. I do enjoy connecting with our viewers, and I thank you so much for your support, and I hope you have a great day, folks. And until next time, keep investing.